Okay, so we are currently on our current market analysis using the ICT concept, and this is 3 months. We are going to start to analyze the Euro US dollar index, and we are going to start with the higher time frame, the 3-month time frame. And as you can see, market has retested into that fair value gap below, and you can see a dealing range has been formed. I've marked. We have a dealing range formed in that orange dotted line and a blue dotted line marked DR, and buy stops were taken at the same time sell stops were taken, and while stops below were taken, the market retraced into that fair value gap, and we are currently on a bullish opportunity. So we are going to focus on that low after a fair value gap has been retested, and so that we can see what's going on a smaller time frame. So this one is a monthly time frame. As you can see, stops taken out, and we have in the current month we are seeing a rally in the upward direction, even though we haven't yet completed the month, but we can see some bullish opportunities at that low. So we are going to focus on that low, narrowing this market into a smaller time frame, like the weekly time frame, so that we can see what's going on a smaller time frame. So again, market is fractal. Whatever happens in a higher time frame, it is narrowed down to the lower time frame. The higher time frame has a more greater power and authority than a lower time frame, so that you should always be focused on a higher time frame. So on this being a monthly time frame, we are going to focus on that low. You can see I've marked on with a circle, and you can see some bullish opportunities, and our buy stops above the market, the dealing range which has been formed. So guys, and I want you to remember that this takes a lot of practice, and whenever you're going into these markets, always use your demo account. Don't put your real money if you haven't grown and you haven't matured into these markets, because the market will crash you. It will crash you. You have to really understand the algorithm, and comes with a lot of practice, comes with a lot of dedication into this market. Okay, so and now this one is a weekly time frame. You can see an imbalance has been formed in that weekly time frame, and of course we are noting some inversion fair value gap at that the big fair value gap which has overlapped these bearish candles. Yes, it is there, but remember, we are on a discount level, so market will always try to reach into a premium area, and you can't take shots in that low, on this low, because if you take shots and market is so cheap, so you'll be crushed. And it is always important to wait, so that market can you will have a better understanding to what is going on in this market. Again, when you go to a smaller time frame, you can see the imbalance gap which is being respected, and it is forming a support, and we are trying currently these markets. You can see a candle which formed on Friday. It is a bullish candle, and it has respected that gap continuously with multiple daily candles. That imbalance is being respected. You can see the wicks are chopping down, but the same body respects the gap. It does not want to go down. And of course, this gives us an idea on what is going on, and we can of course narrow down to a smaller time frame like the 4-hour, so that we can see what is going on in these markets. Remember, our sentiment is bullish opportunity from a higher time frame perspective. Okay, you can see an order block on the daily order block, which market continuously respects. And order blocks and fair value gaps, you should be able to understand them, because a true order blocks forms after a fair value gap. A true order block form when a fair value gap has initiated itself. So remember, this one again, you will have to take a deep understanding on these markets, because it will take you a lot of attention, a lot of effort, because it requires dedication and continuous practice into understanding these markets. Again, of course, nothing comes so easy, nothing is cheap. And remember, whatever the effort that you'll put into place, that's the output will be the same. If you put a lot of effort, you will have an equal inverse output. So an SMT has formed, marked. You can compare this chart with the Euro USD. You will see with the British Pound USD or the GU, you will see that crack in correlation with an SMT. Again, this is a 4-hour time frame. A gap is being formed after an SMT is forming at the same time. And of course, this is the area where we have a daily order block. And at the same time, this is an area where we are expecting bullish opportunities. So market might try to retrace back into this fair value gap before rallying upwards. Again, for you, it's all learning. Not taking any money. I'm not trading with anyone. I'm also journaling. I'm using a demo account so that I may be able to again knowledge. This knowledge, it's better for you to, again, it's important for you to practice this kind of things, because they'll come in handy in the future, and you might not know when it will be beneficial to you. So it's always good to practice everything. If you're good in music, go practice music. If you are good in sports, go practice sports. If you think you are good in other areas like being an artist, go practice at to become an artist, because these small practices will help you. So this is a Euro USD. Again, you can a 3-month time frame. Stops were taken on that X with the dotted line. Again, that X is also that dotted area. It is also our dealing range. You can see market took buyers and retraced into that inversion fair value gap. You can see a gap which has been inversed multiple times, retraced back at that region, and now market will try to rally downwards. Again, remember, President Trump of the US has tried to do major things, like he visited the people from was it Asia, and he has been making some major deals with investments into his country. So the sentiment also helps us to determine the state in the market, because with that cooperation, the US dollar index will of course be bullish, and it will try to gain strength. So in this monthly time frame, we can see that stops were taken above the market price at that dotted region marked X, and we can see currently market is trying to rally downwards. So we are going to go into a smaller time frame like the weekly and the daily and the 4-hour, so that we can see what is happening at that specific area, because at this moment, after we have taken those stops, market of course will try to go to an area of to an area of discount from an area of premium. So in this daily time frame, you can see our gap, fair value gap, has been formed in the daily time frame, and that imbalance marked. And you can see the wicks are chopping, but the bodies are respecting that gap, which means the market does not want to go above the gaps. It really wants to go down so that it can take the stops below the market price. Okay, so remember, it's from an area of an imbalance to another area of an imbalance, or either to an area of a gap, a high or a low, from an internal range liquidity to an external range liquidity. So our internal range liquidity, it is these gaps which are forming on this daily time frame, and our external range liquidity will be that low sell stops marked on the below the market price.